What up, people? Happy Saturday. Kamari Ellis here, the Finance Rebel. You're tuned into the Finance Rebel Show. Every Saturday, we do our wealthy conversation segment at noon. Today, it's a little early. We're about an early before schedule or early schedule because I have some prior engagements. Many of you know I am the treasurer of the Philadelphia Association of Black Journalists, which is a local chapter of the National Association of Black Journalists. And today we have our board retreat. So I got some other duty-licious things I have to do today. I'd rather be here with y'all talking about stocks, talking about the market, talking about taxes, but duty calls, so I must answer. All right, so today we're going to be talking about Warren Buffett's annual letter or the Berkshire Hathaway annual letter. I've been talking about this for a while. I've been wanting to talk about this for a while. And do a whole series of these. I think I will definitely begin to do that going forward now because there are a lot of jewels in these letters. Buffett's been writing these letters since about 1965. So we'll definitely dive into that. But as always, not sure what to do here, y'all. I'm getting calls. Give me one. Give me 1 second. My bad, everybody. Things happen during broadcast, but I'm still here. All right, so let's get this party started because, like I said, I have to get off early. All right, so listen, S&P 500. S&P 500's been really interesting this week. All right, closed down 38.11, $3,811. Down week to date over the last 5 days, about 2.45%, almost 2.5%, roughly. Year to date, market's down 1.47%. All right, so stock market's down. Oil closed at 61.66. That ran up about 4% this week. It's up a little over 20% year to date. All right, and gold closed at $1,753, $1,753. I didn't get a chance to calculate that number, folks, but y'all can see that number is going down for gold. Gold's been down. Gold's been falling. And there's a lot of interesting things coming in over the markets because money's starting to reallocate. So when we start to see gold fall, oil's going up, right? Even the 10-year bond. I don't talk about the 10-year bond a whole lot because it's a little bit more technical, but we're seeing the 10-year bond yields go up. And when the 10-year bond yields go up, that usually means the investors and bondholders feel that inflation is on the way. We're starting to see more, because everything's pegged to the 10-year, right? So we're starting to see more interest rates starting to rise in mortgage values because, again, everything's pegged to the 10-year. Everything from, again, mortgage rates, credit card rates, a lot of loan value rates and things like that. So it's starting to get a little interesting. Out here in these markets. Listen, we are overdue a correction in the stock market. Everybody thinks that the market only goes up. The market only has green days. That just ain't the case, folks. Not in the long term. The market's definitely overheated. However, be ready because some things are definitely going to shake up. I don't know when, right? I can't call that when. I don't have tea leaves. I don't have a crystal ball, but I do have the benefit of over 20 years experience. What goes up must come back down at some point. All right, so let me say hello to everybody that's joining us. Let's see. Mayor Abara, I hope I'm saying your name right. Christopher Allen, how are you, sir? NYC is here supporting. I appreciate that. All right. Ooh, Chili Davis, how you doing, sir? Lost on paper, 10K. It's all right. Don't panic. All right. Chili says, as inflation comes, oil, copper, silver. So basically what Chili's talking about is the commodity play, or what happens when inflation rates go up. Oil, copper, silver will also go up, which will also kind of leak into consumer pricing or the CPI numbers to a certain degree, because people will start to have to pay more for things. I'm not the inflation dude, but, and what I mean by that is everybody's like predicting inflation. I mean, I think we'll be okay. I don't think inflation's going. I think the Fed is starting to put more money and being more being more aggressive about putting more money into the system because they want to raise inflation. You actually need a good level of inflation to have a good economy. But it's going to be interesting. Some people feel that because of all the Fed stimulus that's been going into the economy, the inflation rate is going to overheat. But they've been saying that for the last 10 years. And so what people kind of miss out is that income rates have not risen that much. All right. So it's really hard to get really super overinflated when your income numbers are not rising. All right. Samir asked, do I think the market will crash? No, I mean, it's definitely going to correct. The market's definitely going to correct. I'll be honest. I can't wait for the correction. I'm going to tell you why. Because we'll be able to shake out some of these really goofy and silly people that have been investing for like a week. I think they're now the next Warren Buffett, and they'll be gone. And I'm cool with that. Because most of them are just trying to sell a product and they're not really trying to educate. So I'm cool with that. Listen, it's a lifelong journey. I've been investing for over 20 years. I've been investing professionally, institutionally over 15 years. So it's a lifelong journey. So let's get into this letter, y'all. I love this letter. I think this letter is very instructive. I think people should pay more attention to it. I'm a big Warren Buffett fan. Everybody knows that now. I know Warren Buffett's not in favor these days. He's boring. He's old. He's crotchety. He's white. Nobody cares what Warren, the Oracle of Omaha, is talking about because he's all about buying old. But there can be value in buying old. It just all depends on what your situation is and what your outcome is, honestly, right? There is no real right or wrong. Ultimately, it's about what you need to do for you, yourself, and your family. So y'all can create wealth for yourself and for the generations to come, for your children's children's children. So y'all know that's what I like to talk about, especially as it relates to the Black community, is generational wealth and all things leading to generational wealth. So I'm cool with that. But so Chili Davis says the market reset. Right. So when the correction comes, the market will reset. But if I implore everybody, go back and look at the market data. Just look at the picture of the market, the highs and the lows. The market still tends to go up to the right. So usually over time, the market, stock market that is, tends to do well, right? It usually keeps pace with inflation. All right, but there are times when the market corrects. So I'm cool with that. You should be cool with that too. You should embrace it. It's part of the game. It's just part of the game. So, hey, Dana, how you doing? Katisa, how you doing? Welcome. Don Johnson, how are you? All right, Thaddeus Green, what's up, Thad? Chili says, happy Sunday to everybody. I answered that already. I don't think Friday was that bad. It wasn't that bad. Tax Lady Renee, what's up, Renee? That's my tax sister right there. Happy Saturday, Angela, to you as well. Cherie, how you doing? We need to study the types of documents in the community and become savvy investors. Yep, I agree. That's why we're going over this letter today. We're only going to go over about a couple pages. It's not that long of a read, but like I said, I have to jet early. I got to leave early, so we won't have the time to go through it. I will come back and do a follow-up. Check into the Finance Rebel Academy. Everybody join the Finance Rebel Academy on Facebook. I'll be doing a lot of them in there as well. Just let me say my hellos, everybody, and we will jump right into the letter. Chili says, after 5 years in the market, the more experience, the better. Yeah, absolutely. The perspective on stocks gives me advantage. We need to preach to youth. I agree. The challenge, though, with the youth is they want everything now. We live in a microwave society. Nobody's checking for that. Nobody really wants to talk about what you can do tomorrow, right? But again, that's why I tell everybody to go back and study the charts. Because if you really want to talk about wealth, like look at those charts. And you'll see that you can get rich relatively quick, but you'll get wealthy in the long term. Just wait, just be patient, and you'll be good. You'll be good. All right, what's going on over here on IG? How's everybody? Eric, what's up, Eric? Prez J2, K Landers, Deborah Bryant, how are you? Jack the First, what's up, Jack? T Space 08, Panda Put, how are you? A Smith 81. And I think I saw you earlier, subscribe. I did see you earlier. The Yell Store, how are you? Lady Real Estate 867 or 867, how are you? The Boss Man PG, what's up? The Glorious One, how are you? Is that Dion TC? I hope I'm saying your name right. I apologize if I did not. Avid Evelyn. Is that Evelyn? Hey. Lock and Key 11 and DJ Flexing. How y'all doing? All right. Yep, Renee's right. It's boring to the youth. We do got to figure out a way to kind of bridge the gap, though, right? To talk about it, to make it relevant, to make it sexy, to make it exciting. And you also should be talking to the youth about money overall, not just in the stock market. All right. Alex Campello's, okay. I've been learning a lot of patience, especially in these red days. Yes, the red days is what make you, y'all. The red days are what make you. For newbies, we should shoot for 20% year growth. If you get 10% in the month, it's fool's gold. Yes, right. So just a quick aside before we jump into this real quick. Y'all all saw GameStop had another 100% day jump earlier this week. I found it interesting. People asked me, was I interested in investing in it? I said, hell no. Nope, I don't want no parts of it. It's like, listen, I reference the crack era a lot because I grew up during the crack era. It's just in me. I saw it. It's in me. It was all around me. And so, yeah, there were guys that were getting money. Look fly. It was fresh, fly and bold. Big chains, nice cars. What I didn't realize at the time, what they didn't realize at the time was it was a trap. But the benefit of being older, right? The benefit of surviving through the years, you see, it was all BS. It was all really smoke and mirrors. And all that money that they made in that short, quick span evaporated as soon as they hit one bad thing, whether it be with a competitor, whether it be with the law, whether it even be with your family, right? A lot of the same dynamics exist now legally when folks in the stock market. You still got the law. You still got some competitors. You can't tell me that there are no people that were in the Reddit communities that weren't competitors of other folks. Why do I say that? Because in the Reddit communities, everybody is anonymous. Nobody knows who is. Nobody. So you can't tell me that other companies are not using that to spoof their competitors. That's what I believe. Also, I say this too. If foreign entities can interfere in the election, why can't foreign entities interfere in the stock market in the same way? They actually could do it easier. Nobody's talking about that either, though, right? So I say all that to say is I don't want no parts of the GameStop crew. I don't want no parts of the Reddit Army's AMC run. That's fool's gold to me. So I'm cool with that. All right. So we got this here. All right. Warren Buffett Berkshire Hathaway released their annual letter. Warren Buffett has written one every year since 1965. I've been promising y'all to go over this, so the day is here. I would also suggest many of you to go ahead and read these on your own as well. A lot of jewels here, right? So a couple quick highlights that I saw in this letter when reading it this morning was Berkshire Hathaway earned $42.5 billion last year. All right. They got 4 components. Now, these 4 components, I think, are really good. And if you could think about these as it relates to your own business, your personal finance, I think it will help you a lot, right? So they have 4 components. All right. So they made $21.9 billion from operating earnings. So operating earnings, that's just the money they make, right? They made $4.9 billion of realized gains. Realized gains is the stocks they sold in the markets. That's the money they made when they sold the stocks in the market. Guess what? It's tax season, y'all. They're going to pay tax on that money when their year end comes. All right. And they also, they have a net unrealized capital gain. That's money that they've made, but they haven't realized it yet because they haven't sold the stock yet. All right. So they made, I got to highlight it. They made 4.9 billion. They got 26.7 billion in gains, and unrealized. So that's the money they haven't. That's the stocks they have not sold yet. So that's the paper gains that they have. It's not a real loss or a gain until you sell. I'm gonna say that again. It's not a real loss or gain until you sell. All right, y'all. Somebody put a 1 in the chat if you understand gains, realized gains versus unrealized gains. That's really, really important. All right. And they had $11 billion. They had $11 billion loss, right? It was a write down on some of the businesses that didn't do so well last year. All right. T-Space always said got a 1 in it. So he understands. Talisha understands. Don understands. Jose understands. Okay. So everybody understands that. All right. Perfect. Because a lot of people get stuck on that. They don't realize that sometimes that, you know, if you don't sell something, there is no stock, there is no profit or loss. It's just paper. Now it's a paper loss, right? It could be a paper gain, but that money don't count till it goes into your bank account for the most part. All right. So remember I said that you could kind of look at your life in the same way, right? So they have the money they earn, right? Your 9 to 5 money. And then they got their money that they make from investing. Everybody can kind of follow the same blueprint. A lot of us do follow the same blueprint, right? So, but that's their business. Now, it says all items stated are on an after-tax basis. All right, so all these numbers are after taxes are factored in. Hey, Bayina, how you doing? All right, so they say here, now I talk about this here, right? It says here, operating earnings are what counts most. Operating earnings, that's their income. That's their income. I see a lot of people out here in La La Land, aka social media, and they say, quit your job. That's cool, but are you ready? Berkshire Hathaway is telling you their most important thing is their income. Okay. And it says, even during periods when they are not the largest items in our GAAP total. So what's GAAP? And GAAP is spelled GAAP, GAAP. And that stands for generally accepted accounting principles, generally accepted accounting principles. All right. So our focus at Berkshire is both to increase the segment of our income and to acquire large and favorably situated businesses. Last year, however, we met neither goal. Berkshire made no sizable acquisitions and operating earnings fell 9%. We did, though, increase Berkshire's per share intrinsic value, right? That's the overall value of what the stocks were, what the companies were, by both retained earnings and repurchasing shares. So they have retained earnings. So all the money that they had, they didn't spend. So retained earnings is almost like savings, all right? And they wind up buying back the stock. So what they did, they brought back the stock. They went to the marketplace. They said, we want to buy back the stock. It's about 5% of the stock. And so that was money to make sure the stock price stayed good. Do me a favor, somebody look up Berkshire Hathaway, BRK.A. And somebody put that in the chat for me, what the price is of BRK.A. All right, so they brought back 5% of the shares. Why do companies buy back shares? So when y'all see this price for Berkshire Hathaway, somebody do me that favor, put that price in the chat for me. It helps to keep the stock price up. Remember, stock price is dictated by buyers and sellers. More buyers you have in the market, right? The higher your price will be. The more sellers you have in the market, or the more sellers you have for a particular stock, the lower price you will have 9 times out of 10. So they said they wanted to be a buyer. So that function helps to promote stock price. Stock price helps to promote shareholder value, right? So it's always shareholder value. So thank you, Chili. Berkshire Hathaway A. Now they have a B too, right? Thank you, Bain. Spain has got a 2 on IG. Thank you. This is their stock price, $364,540. $364,540. Now, that's a pretty penny. You can buy fractional shares, and there's also a B share or a B class of stocks as well. I don't want y'all to get lost in the stock price, but I just wanted to show y'all that. Thank you, Michael. I just wanted to show y'all that just for a reference point, just to give you context. All right. And that's the B share right there. All right. But just to give you context, Warren Buffett doesn't really believe in splits. Charlie Munger, who's Warren's partner, who's just as much in control over there at Berkshire Hathaway as Warren is, they don't really believe in splits. Now, juxtapose that or compare that to Apple and Tesla. Now, before I go too far any further, Warren made a very interesting point here that I want to read to y'all in a minute. Talking about conglomerate promoters. So just bear with me. We'll get to that. But y'all want to stay tuned to that because it ties back into something and a person and a company I talk about a lot. All right. So I'm reading through some of the highlights that I made here, y'all, of some of this stuff. I'm not going to bore you with everything, but just the things that I thought were pretty interesting. I mean, the whole thing is actually fascinating. I'll be honest with you, but I know I'm also wired as a nerd to do like that or to be like that. All right. So he says here, as I've emphasized many times, Charlie and I view Berkshire Hathaway as marketable stocks at year end worth $281 billion. So they have $281 billion worth of stocks in their portfolio. And they look at that as their collection of businesses. So Lock and Key asks, do you think Berkshire Hathaway's B shares will grow like the A shares? If I pulled up a chart, I'm pretty sure they are very much correlated. They're very much tied to the same things, to the same value. They just have different voting rights. All right, so they got $281 billion, y'all, as a collection of businesses. That's how they look at their investing in the stock market. Warren always talks about the businesses, or don't look at it as a stock that you're buying. Mind you, on the Finance Rebel Show, our stuff is really geared towards basic and beginner people. We're not here for the flashy. We're not here for the super duper folks looking to be sexy. We're here for the fundamentals. All right. The basics, the foundation. All right. And so we're looking at long-term investing. That's what we believe. That's what we promote here. Because again, this is all about the beginners, just getting you on your way to your wealth journey. All right. So Warren's ideology is long-term hold. My ideology for beginners is long-term hold as well. I say get the basics down, understand the market, then move on and do some of the more super sexy things. All right. So he says, we don't control the operations of these companies, but we do share proportionally in their long-term prosperity. From an accounting standpoint, however, our portion of their earnings is not included in Berkshire income. All right. So Everything that all the retained earnings that a company, let's say like a Coca-Cola or an Apple, is not reflected on their balance sheets and income statements. That's what he's talking about there. All right, so he says, so this is the point I was talking about. He writes this statement, y'all. He says, investing in illusions can continue for a surprisingly long time. Wall Street loves the fees that deal making generates, and the press loves the stories that colorful promoters provide. At a point also, the soaring price of a promoted stock can itself become proof that an illusion is reality. I will read that again. Investing illusions can continue for a surprisingly long time. Wall Street loves the fees that deal making generates, and the press loves the stories that colorful promoters provide. At a point, also, the soaring price of a promoted stock can itself become the proof that an illusion is reality. What do y'all think about that statement? Like, seriously, what do y'all think about that statement? It says Wall Street loves the fees, right? And the press loves the stories. So what do we see every day? It's like all these stories about these companies, like companies buying Bitcoin and accepting Bitcoin. But that really has nothing to do with the underlying value of the company. It has nothing to do with the value that that company is providing to their clients and or customers. But that's what gets the spotlight. I found that really interesting. And then it says, at a point, also, the soaring price of a promoted stock can itself become the proof that an illusion is reality. So just because a stock goes up, does that mean that the company is actually a good company? I mean, that's what a lot of people seem to believe. I don't know. I have my thoughts about it. I want to know what y'all thoughts are. So go ahead and chime in on the chat. All right. Miss Gales, how are you? All right, no problem, Lock and Key. Proverbs 31, how are you? T-Space says, it sounds like they are gaslighting the companies and profiting off of it. Yeah, and that has always happened. Anybody go back and look at Enron, right? Anybody go back and look at WorldCom? Anybody go back and look at, oh man, I can't think of the name of the company. Tyco. Go read those stories. And then look at how the people that were involved, right? Because accountants are supposed to be like the truth dealers at all times. They're supposed to be dealing the truth because the numbers are the numbers. But when the truth dealers actually start helping the promoters to paint the picture and narrative, it gets all messed up. And we've seen that time and time again. So go back, y'all look at that story. All right, so Chili says 1 year ago, BRK is worth 312, almost 16% to 364. Okay. Jose says hype. Trend investing leads to bad companies being propped up. I would agree. Addicted to chocolate. How are you? Welcome. All right. So that he was saying that, though, to give you more context, because he was saying that many companies view Berkshire Hathaway as a conglomerate. And then he was talking about all the bad things inside of a conglomerate. And he even admitted that Berkshire Hathaway is a conglomerate, but it doesn't follow the typical patterns of conglomerates, because conglomerates oftentimes engage in a lot of shenanigans. He said their focus is always going to be finding good businesses and creating value for the shareholders. All right. So I'm going to read this here. For those reasons, our conglomerate will remain a collection of controlled and non-controlled companies. So they own some of the companies, right? Like a Geico. They own Geico with the little gecko that makes the commercials about absolutely nothing, but oftentimes are hilarious. That's Warren Buffett's company. All right. So again, he says, for the reasons our conglomerate will remain a collection of controlled and non-controlled businesses. Charlie and I will simply deploy your capital into whatever we believe makes the most sense based on a company's durable competitive strengths, the capabilities and characteristics of its management and price. All right. So that's a chip. That's a clue, y'all. That's a cheat code, right? I mean, he says the same thing all the time, but he even goes a little bit deeper. He says they are deploying the capital based on a company's durable competitive strength and capabilities and character of its management and the price, right? So they don't want to pay too high of a price. They want to invest in companies that have great management. Hopefully y'all taking notes, right? Have great management and they have durable competitive strengths. All right, so what does that mean, durable competitive strengths? That means that there's something special about them. There's something that stands out about them. There's something that is unique, right? Oftentimes you'll hear the term economic moats or financial moats. He uses that a lot also. So that makes them different. That makes them stand out. I mean, there's a reason why he likes Coca-Cola. There's over 1 billion Cokes drank every year. Forget about the health benefits. That's not what we're talking about, y'all. We're just talking about the mere fact that the people are buying this soda. It's got a great brand. That's undeniable, right? That's the kind of company he likes. And when I go, because he also lists their companies in there. This is a great read. It's only about 15 pages, right? And I talked about this, what was it, last session before last, something like that. But when you look at some of the top carriers or the top holders he has, they're all kind of special. Apple is one of them. Bank of America is another one. American Express, right? Chevron, we talked about that the other day. Coca-Cola, General Mills, Merck, right? Verizon. They're all special. They're all market leaders. They all have something about themselves. Now, there was something else that I found interesting. And like I said, we're not going to go through the whole thing because I do have to get off very, very shortly and get to my board meeting. So give me 1 second, y'all. You know what? I left out a part. I'll go back to it, though. I'll go back to it. Give me 1 second. Yeah, mind you, this just came out today. So this is fresh. I read it, and I'm just giving you my thoughts. I haven't really had a chance to sit down and digest it and like marinate on it. So I want to go back to this part again because I think this is really, really important. Really, really important. And I see I got some comments. I'll definitely come back to those as well. All right, so he said, investing illusions can continue for a surprisingly long time. Wall Street loves the fees that deal making generates, and the press loves the stories that colorful promoters provide. At a point, also, the soaring price of a promoted stock can itself become the proof that an illusion is reality. All right, this is the part I left out. Eventually, of course, the party ends, and many business emperors are found to have no close. Financial history is replete with the names of famous conglomerates who were initially lionized as business geniuses by journalists, analysts, and investment bankers, but whose creations ended up as business junkyards. Conglomerates earned their terrible reputation. So, you know, he makes some compelling points there, points that I talk about all the time. And it really just stuck out to me. It really just stuck out to me. All right, now, y'all know how I always bang in y'all heads that cash is king. There is no other better example that cash is king than Mr. Warren Buffett through his investment philosophy and execution at Berkshire Hathaway. All right. So Berkshire Hathaway now enjoys 138 billion of insurance float. All right, I'm gonna read that again. Berkshire now enjoys 138 billion of insurance float. Funds that do not belong to us, but are nonetheless ours to deploy, whether in bonds, stock, or cash equivalents, such as U.S. Treasury bills. Float has some similarities to bank deposits, cash flows in and out daily to insurers, with the total they hold changing very little. The massive sum held by Berkshire is likely to remain near its present level for many years and, on a cumulative basis, has been costless to us. That happy result, of course, could change, but over time, I like our odds. So what does that mean? Do y'all know what float is? If y'all know what float is, put a 1 in the chat. If y'all know what float is, we're going to break down float. So float is cash. Float also could be viewed as OPM, right? Other people's money. But float is, like he said, the difference between the money coming in and out to pay claims. It's the insurance monies, right? When you pay money to your insurance company, they only pay you money back if you have a claim. Now, insurance companies world over study the likelihood they will have to pay out a claim, whether it be for life insurance, whether it be for property and casualty, whether it be for automobile, whether it be for liability. They kind of know the odds, right? They know the probabilities. They know all the percentages. And so it's almost like going to the casino. The insurance companies are the house. Now, I don't want y'all to get confused. We still all need insurance. All right, don't get it misconstrued. We still all need insurance. However, the money that they're holding that's dedicated to pay out claims, that money can be invested. That's like the real gem and the real secret to Warren Buffett's success. Now, everybody can't do that, but what you can do is become avid savers. And from your savings, you can start building that cash cushion up and begin to invest, right? Because when you think about insurance, it's very, very conservative. It's very, very boring. But here you have this boring company that's very, very cash heavy just because of the operation and the very nature of the business. And they've been able to take that and make a mint, literally. How can you take this? And listen, the reason why I talk about these things is so we can take some of these things and implement it in our own lives, right? So how can you take some of these ideas and do that? Now, obviously, you're not insurance companies. You're not big conglomerates. I get it. But if you become avid savers, you can start getting strong cash positions. And when you have strong cash positions, you can invest more safely, more aggressively, more soundly. And you can get involved in certain investments that you normally would have been not availed to or not have privilege to partake in. So it really behooves you to have a strong cash value. All right. So again, I would strongly suggest that you all look into this, read this. And like I said, we'll be talking more about this in the Finance Rebel Academy on Facebook as well. I'll probably just start breaking it down, but there are a lot of gems here. There are a lot of gems here. So, all right, any questions real quick before I go? I'm going to start getting into some of the commentary. Like I said, I can't stay on all day long, but like I said, Warren Buffett is the man. Yes, he's been able to benefit from the rising tide that is called the U.S. economy. Well, that's another point he made. He said, never bet against America or the American economy. All right. But the man's ability to see value and admit sometimes when he's wrong, because he talks about part of the losses part of the reason and the rationale why he lost money last year, why Berkshire Hathaway lost money last year, is spot on. He said he overcalculated the value of a thing. He thought it was still a good company. It's a company that is an auto parts company, and he said, I openly admit it, it's a fine company. It's just going to take a little bit longer. All right. So like I said, I have to jet soon. I have to leave soon. So throw any questions you have in the comments, and I'll get to some of these comments as well real quick. Jeff, what's up? What's up, man? How you been? Mr. Love on Purpose, how are you? Welcome. Happy Saturday to everyone. If you are just now joining, you are watching the Finance Rebel Show. I am Kamari Ellis. Every Saturday, we do wealthy conversations. All right. The whole purpose of the Finance Rebel Show is to help everyone increase their financial IQs by making money simple, plain, happy, and fun. Right. I try not to make money topics boring. I know everybody thinks money's boring. I don't. I'm geeked about it. I'm a money nerd, but I try to, make it simple and plain so everybody can digest it and talk about some of these more complex things that could actually apply to your life and that you can use in your life. All right. Tiffany has joined us. Good morning, lady. How are you? All right. So let's see. What do we have here? I got to that question. All right. So Alex says, I feel that what they did with CCIV, even though I think that company will be a good company years from now, they hiked it up to a price of $80+ per share, and now it's valued half of that. CCIE is, isn't that Churchill? Isn't that SPAC? A lot of the SPACs are getting a lot of attention these days. Listen, what's the real value of a thing? I put a post up on my Instagram the other day talking about price versus cost. Many times we get that confused. That happens in the stock market as well. See, your price is super high and we think there's value there, but we really don't understand how to interpret the overall cost. So it gets very, very interesting. All right, so CCIE is trading now for $30.75. All right, $30.75. What do I tell you all to do when we are looking at a stock? Should always go to finance.yahoo.com. It is a free tool. And you can get a quick synopsis of it. So I'm pulling up that right now. Give me 1 second. Again, any questions, throw them in the chat. I will be getting off in roughly 7 minutes. All right, so CCIE, $30.75. That's what it closed at on Friday. It's worth $7.9 billion. Let's just say $8 billion to make it easy. All right. No dividend. They're brand new, pretty much. I think they just got on the market. They trade about 68 million shares a day. So that's pretty impressive. All right. So when you look at the profile, always look at the profile. Always understand what you are investing in or looking at. So Churchill Capital Corp 4 does not have significant operations. It intends to effect a merger, capital stock exchange, asset acquisition, stock purchase, reorganization, or other similar business combination with other or more businesses. Basically, it's like a holding company for everybody. All right. It's a holding company. Mr. Gale says, to piggyback on your statement about belief in the company, I believe in GE, and I have a good investment buddy that feels I'm not wise in my beliefs. Your thoughts on GE? GE used to be the biggest company in the world, and they are not that anymore. They sold off some of their units. They sold off their healthcare unit. And I think, in full disclosure, I think I own like 4 shares of it because I bought it at like a really low price. GE does a lot in like the air turbines and things like that. Matter of fact, since I'm on Yahoo right now, let's bring it up. But they haven't been able to figure out how to really make it rain. And they're also plagued by pension debts, right? Pension debts, when you have a large worker base that's older, that's approaching retirement, you have to be able to pay for their pension, when the time comes. So a lot of things plague them. I think they'll be around for a while. I don't know if they will be a moneymaker, though. Now, year to date, they've been making money. Stock price is $12.54. Stock price, you know what? I'll just put it up on the screen. Give me 1 second, everybody. Give me 1 second. Un momento. All right. Stock price is $12.54. All right. Started the beginning of the year, $10.47. So they're up roughly 25% year to date. Now, what does GE do? Can anybody tell me? What does GE do? All right, so this is their description. All right, GE company operates a high-tech industrial company in the United States, Europe, Asia, and the Americas, and the Middle East, and Africa. So that tells you they're international, right? They're not just doing business in one place. So that means they have diversified revenue streams coming in from a diverse geographic locations, all right? It operates through power, renewable energy. Renewable energy, we've been hearing a lot about that, right? Like solar power, batteries, electric vehicles, right? That's an alternative. That's a renewable. Aviation, healthcare segments. The power segment offers a range of heavy duty and aero derivative gas turbines for utilities, independent power producers. So they sell all these big powered, high ticket price things. And a lot of them are boring. So nobody's thinking about them at all. And so since they're not sexy, they're oftentimes going to be overlooked. But GE is still making money. Almost $80 billion made in 2020. But what's the next question I want to ask y'all? Do y'all know? Do they make a profit? So it looks like they had a profit of about $5 billion. Not the best margins, but usually when you have big companies like that, it's usually not going to be the best in terms of margins, but they're still making money. And like I said, if you look at the 2019 year, they lost about by $5 billion, right? In 2018, they lost about $22 billion. All right. And 2017, they lost about $6 billion. So they've been getting hammered for quite some time. Now, so Ms. Gales, let's see how much cash they have. Let's see how much cash they have. Thank you all for the hearts. I appreciate it. So at the end of 2020, they had roughly $44 billion in cash. So they're making money, right? They have good cash flows. It's just a rough time. Will they survive? They will probably survive, but they will probably not look like the GE of yesteryear, right? And if you go back and you look at some of the scandals, we talked about this in Warren Buffett's letter. Jack Welch was held one of the greatest CEOs, former CEO of GE, held one of the greatest CEOs of all time. But they also found that Jack Welch was cooking the books a little bit. So you got to keep all that into context. All right. Ladina's here. SM Dennis is here. How you doing? So Ms. Gales, do me a favor, text that to me. I can't get into that now. I only have like 5 minutes and I have a couple other comments I have to get to. Actually, I told you I was going to be going in 7 minutes. So I'm over time. All right. Mayor, forgive me for saying your name wrong. Abara, my apologies. One unrelated question. Should one invest if the PE ratio is too high? Well, if that was the case, you would never invest in Tesla. The real question you have to ask yourself, are you investing or are you speculating? Some people feel that they're investing. Some people feel that they're speculating. Well, excuse me. Some people feel that they are investing, but in actuality, they are speculating. Okay. So look at the company. PE is cool. PE is cool to look at, right? But you have to think about this. What does the overall company do? Tesla's got a super high PE. PE is price to earnings ratio, everybody, right? So you take your price, you divide it by earnings per share, and that'll kind of give you a ratio to let you know if the stock is overpriced or underpriced, or overvalued or undervalued, right? Tesla's PE is bananas. So it would clearly tell you that it's overvalued. Tesla has a PE ratio, and when you see, yeah, I got it on screen, so give me 1 second. When you see it, all right, it's 1,055. A couple years ago, people were saying a PE over 15 was overvalued, overpriced. Tesla's is 1,055. By the way, Tesla is not profitable. Tesla does not make money off of their cars. Again, Tesla does not make money off of their cars. But right now they're trading at $675. They just got whacked too, right? Because the price of Bitcoin just fell, and they announced that they were going to invest more in Bitcoin and start holding more Bitcoin and hold more things in Bitcoin. Not figure out how to sell more cars, right? Always be cautious of looking at the right hand, because you never know what the left hand is doing. Or always be cautious about focusing on the right hand, because you never know what the left is doing. So, anybody ever play three-card Monte? It's always smoke and mirrors. All right, last question. Any thoughts on PLTR, QZ, Plug, and also Kathy Wood? I think, is it Kathy or Kathia? I always say her name wrong. I think she's smart. I think she was smart to get positioned into that space. I always say that name wrong too. Plantier, which is PLTR. They're the security company. I think they're going to be around. Plantier Technologies, they're going to be around for a while. They got like all the data. Plug's going to be around. I think good things about Plug. Listen, I am not giving anyone investment advice. This is not for investment advice. I am not recommending you to buy or sell anything. So, but I think some of those companies have promise, some more than others, right? But I think it's going to be really, really interesting over these next couple of years, because things are going to shake out at some point. Locky Key says, I need a Tesla and Ford merger. Yeah, but who's going to buy that? Ford wouldn't buy that. Full disclaimer, I do own some shares in Ford. I've talked about that publicly. They're overvalued. So when it's time to come to the table and buy that, who's actually going to do that deal? Maybe. I mean, listen, anything's possible, right? But I don't see it in the future. But listen, y'all, this has been great. Been on for a little bit. I told you I got to run. Any questions y'all might have, do me a favor, just send me a text. All right, you can always catch me at 215-974-0058. Join my text community so we can always stay in communication. I'm not trusting the likes of the Googles and the Apples. Well, Apple's actually kind of a good guy in this scenario, and the Facebooks, because they like to play games with the algorithm. And I'm not complaining, right? Because it's free. Far be it from me to complain about something that's free. But instead of complaining, I'd rather do something with it. So if you like the value that I bring and the information that I bring several times a week, and you want to stay in tune with everything else that I got going on, plus if you want to communicate with me directly, text me, 215-974-0058. Now, I don't man that number 24 hours a day, but I will get back to you. All right, I will get back to you. So again, 215-974-0058. All right, everybody, I appreciate you all watching and tuning in to the Finance Rebel Show. We are here at least twice a week, right? On Wednesdays for our Wealthy Wednesday segment at 8, and on Saturdays, usually at noon. This week, I'm early. All right. Now, another thing that I'm doing a daily tax video. All right. So you can find them on all my platforms, my YouTube, Facebook, Instagram, because it seems like nobody's really, really aggressively spreading the truth about tax and the power of tax. So I said, I'm going to raise my hand take on the mantle, and I'm going to put out something every day until the end of tax season. Tax season is 47 days away, y'all. 47 days away. Don't procrastinate. Get y'all taxes in. If you can't get your taxes in, do an extension. All right. And remember, if you file an extension, the extension is an extension to file, not an extension to pay. So don't mess around with the IRS. The IRS has already let everybody know while they're backed up, while they have over 7 million pieces of mail that they haven't opened, while they still haven't sent out billions and millions of dollars in stimulus checks and tax refunds from 2019, they are going to be aggressively going after people who are not in compliance, basically, who haven't filed their taxes, and people who owe the IRS an exorbitant amount of money. So get y'all tax affairs in order, y'all. All right. It ain't that hard. It ain't that easy. And you can always make a payment arrangement with the IRS if you don't have all the money to pay them. All right. So I will see y'all next time, next Wednesday, next Saturday, and probably a few times in between. So do me a favor, go check out my daily tax videos, and share them out for me. All right. Have a great day, everybody. Have a good one.